All right. Hello, everyone, and welcome. Flip through the next slide. I believe we're on the 190th governance and risk call here at MakerDAO. Awesome. Can still count up. Good sign. My name's Peyton. I go by Pros11 online, and I'm one of the governance facilitators here. We're here at our weekly call, and we discuss things relevant to what's going on in the protocol, risks we're facing, as well as current votes, initiatives, all that sort of fun stuff. We'll go over a couple of the ground rules, I guess, before we get too far in. As you might have noticed, this call is being recorded. So hello if you're watching the recording. For those of us that are here live, we would ask that we try not to speak over one another, just to keep the mic clear. With that said, though, we do encourage open participation. We want you to ask questions, give comments, all that good stuff. There are a couple facilitation tools that would help me out if you are attending here live. Number one is the raised hand feature on Zoom. If you have something you'd like to add to the conversation, and you know you're willing to be called on, it's super helpful if you just raise your hand, and I can work you in at the next available moment. If you're unable or unwilling to hop on the mic, you can always utilize the chat. More than happy to work in comments when conversationally appropriate. I think that covers most of the do's and don'ts. So let's go ahead and take it to the agenda here. As usual, we'll start with our governance roundup, going over the votes, as well as updates on the maker improvement proposals and what's been happening in our forum. Let's see. So I believe that this is the last week's slide for our actual docket today. Today, we'll be talking about the demand issue for DAI and kind of the current state of the market and how that's affected. I will be going over the exec. Makerman asking about that in the chat. So yeah, my apologies on this slide. Go ahead and ignore it. Our main topic today is DAI demand, and we'll get to there shortly. If you would go through the votes, though. Awesome, thank you, Thomas. So pretty quiet week on the polling front. We did not have any weekly polls. However, there are still 2 ongoing green light polls. Voting for those ends on Monday. So please do express your opinion there if you haven't had the chance to do so yet. And sometimes the more exciting side of it, we do have 5 ratification polls to go over as well in our MIP segment. Awesome. In terms of executives, Makerman was asking in the chat, yesterday's has not passed yet. We were currently sitting at like 64.7, about 65,000 MKR in support. So a little less than 11 MKR, I believe, from the hat. So if you haven't seen that exec or haven't gotten a chance to vote on it, please consider doing so. For the one going up next week, we have some foundational layer 2 work to include in the spell, as well as a core unit MKR vesting transfer. Cool. So that should cover it on votes. Like I said, kind of a light week for us. There are plenty going on in the MIPS corner, though. I believe we have Gala presenting for us today on that.
Yes, hello everyone. This is Gala from GovAlpha, and I'm presenting MIPS for this week. So on Monday, we had 5 proposals that entered the May governance cycle. We can take a look at the votes so far. So yes is the leading option at 100% for all proposals as of today. We have MIP 65, Project Clydesdale, Liquid Bond Strategy and Execution. MIP 68, Monetalis Lusitano, UK Green Economy, SME Wholesale Lending. Then there's MIP 69, L2 to L1 Fast Withdrawals. We have the Core Unit Budget Process Amendment and the Strategic Happiness Core Unit Budget. So these numbers were drawn from the voting portal around 3 hours ago. For proposals in RFC, there's a ton of them. So yesterday was the deadline, and we have a few new ones. Let's take a look at them. Top level MIPS, we have MIPS 72, which has been around for a while now. It's the delegated collateral attachment real world assets arranger application from 6S Capital. And there's 2 brand new proposals that have been posted yesterday. That there's a MIP 74, permissionless open market operations, which defines the process used to agree and action permissionless open market operations with funds controlled by maker. And there's MIP 75, which proposes the formalization of task forces. So these groups will be responsible for coordinating high-level business decisions on behalf of the DAO. For that, there's already, for MIP 75, a MIP 75 derived sub-proposal, onboarding the growth task force. We have one core unit onboarding for lending oversight core unit. So LOVE intends to support the DAO in its evolution to become the central pillar of DeFi by facilitating the sustainable onboarding of tens or hundreds of billions of more complex use cases. For facilitator onboardings and offboardings, there's one facilitator onboarding proposal for Psychonaut for the Immunify Security core unit. And for the Data Insights core unit, there's a voluntary facilitator offboarding from Thomas, and he hopes to be succeeded by Tadeo, for whom we have a facilitator onboarding proposal. What else? There's amendments. So we have two amendments going on. One that has been going on for a while, that's the core unit offboarding process amendment. We are still working on that, and hopefully we will be posting on the forum soon the updated version. And there's one amendment to MIP 16. This amendment adjusts the governance, the weekly governance cycle. So the governance cadence from executive proposals being posted on Friday to this being posted on Wednesday. We have two core unit budgets, one for strategic finance and one for growth core unit. Note that both of these budgets use the new, yet to be ratified core unit budget process. And finally, there's Maker-Shire Hathaway, which is a special purpose fund that intends to experiment with various yield generation strategies. So the ratification polls that are up now, they will close in little less than 2 weeks on May 23. So please go vote if you haven't done so yet. And for June's governance cycle, remember that the formal submission window opens on June 6th. Voila. That's
awesome. Thanks, Kala. I know there's a lot to round up. Really appreciate you giving us a picture of everything that's happening in forums. And speaking of, Artem, that brings us to your territory, I believe.
Yep. Hey, everyone. Happy Thursday and welcome to the GNR Forum recap from the forum at a glance. And we're going to go over some of the top news, announcements, discussions, and all of our current signal requests. And we'll get started with this week's top announcements. So first up, we know that the PE team has been working really hard on a product that'll allow DAI transfers across L2s. And it was called Maker Wormhole. And unfortunately, Jump Trading, an American financial market trading firm, has been also building a bridge with a similar name. And they even acquired the domain wormhole.com. So in response to this unfortunate news, the Maker Wormhole has been rebranded and is now called Maker Teleport, which will continue to help us promote the product without future conflict or confusion. Next up, we have Tobol here again. And the Maker brand team has put together a MakerDAO announcement table that's collecting all announcements prepared for MakerDAO's Twitter and media audience. So check out the post for an access link to this and a breakdown of how the table works. And next up, we have Gov Alpha and us, GovComms. We'll be experimenting with a new time for a monthly governance and risk call. So on May 26th and June 30th, we will have GNR calls that will take place at 21 UTC. And the reason for this is to allow community members from opposite time zones to participate and join these calls. And next up, a quick important message. Pretty simple due to recent events. Please direct all messages related to media queries to media@makergrowth.com. And now we're moving on to our discussions. A couple of less discussions than usual, but we have starting off with the Oracle's core unit submitting a Maker Teleport Oracle. And so it says wormhole, but I'm gonna say teleport just to keep up to date. Due to most of the, hold on, go back for a second. There we go. I'll just summarize. Due to most of the L2 designs having a built-in confirmation that takes a long time, it's a delay on the L1, and we will need to use a separate method to ensure a better user experience. And this can be provided through a teleport Oracle using currently existing Oracle feeders. And the Oracle core unit proposes a design for this teleport Oracle along with its specific features. There's also some notes and information on securities, but it's a good post, so check it out. Next up, we have Adam Young publishing a post introducing Procession Capital to the community in advance of a formal application that will be submitted in the coming weeks. Procession is an SEC-regulated New York-based investment advisor specializing in asset-backed and structured credit portfolio management. For more information on Procession, their goals, their strategy, and also a work in progress of their eventual arranger application, check out the post and the links provided within it. And now we're moving on to our signal requests, and there's a lot of them. I believe a total of 7 right now. First up, we have Maker Teleport, known until recently as Maker Wormhole. It will soon launch and provide users with safe and fast DAI transfers across L2. And Ace from Strategic Finance is proposing that we launch Maker Teleport with a 1 basis point fee, still making it over 75% cheaper than other bridge products. Creating a 1 basis fee will provide additional revenue stream that is probably negligible to a casual user. And in conclusion, Ace is asking whether we should launch Maker Teleport with a 1 basis point fee or no fee at all. And next up, we have Abdallah from BaconDAO requesting to onboard a D3M to create a Bacon protocol DAI pool. Now, Bacon coin is a stable coin backed by US mortgages, and BaconDAO would oversee this pool and select home loans based on a mandate such as the FICO score, LTV, and more. Abdallah presents the pros and cons for a Bacon D3M. However, the voting results aren't in favor at the moment, but the signal doesn't close until May 19th. And next up, we have GovAlpha, who submitted a signal request to gauge support for increasing the minimum threshold to trigger the ESM from 100,000 to 150,000 MKR. This adjustment will help minimize the potential threat of any hostile emergency shutdown if it were to occur. And the reason that the signal is happening now is due to the recent fall of MKR price, which makes it a lot cheaper to trigger an emergency shutdown. The risk to this is that it may be more challenging to perform a beneficial emergency shutdown if needed. And in conclusion, GovAlpha is asking whether we support raising the ESM threshold to 150,000 MKR. And next up, we have William, who compiled recent discussions between growth, risk, and PE to propose an Ant Alpha institutional vault. Now, Ant Alpha was established by Ant Pool, which is one of the largest mining pools. And this institutional vault aims to improve Maker growth with the attempt to boost DAI supply, help us generate more revenue, improve capital efficiency, and also commit as a long-term borrower. They also provide in the post mechanisms and proposed terms to support their growth goals. Additional details on the proposed vault are available in the signal request, so check it out. And next up, we have 𝘱𝘰𝘭𝘪𝘵 proposing to set the lid to 30,000 DAI. The rate limiting flapper allows to kick off a new auction if it doesn't increase the total DAI in auction above the threshold, which is the lid, unless it's the same value as the lot size. And currently, the lid is set to 150,000 DAI and can run up to 5 flap auctions at once. The lot size, however, is 30,000 DAI. And 𝘱𝘰𝘭𝘪𝘵 proposes to set the lid to the same value as the lot size, which is 30,000, to ensure that there can only be 1 parallel flap auction running at a given time. In sacrifice, though, we will limit our MKR burn per day from 7 million DAI to 1.5 million DAI. Now, the voting ends for this tomorrow, May 13th. And next up, we have Andrew Bourbon, who asks to reactivate MKR burn. He states that shutting down the burn also shut down our only revenue distribution model that we have and yet to replace it with something better. These actions may have caused stakeholders to lose some faith in our ability to deliver certain results. And the community and our stakeholders are very important to us. And it's a risk if we do not continue to burn MKR in times of low prices. In conclusion, Andrew asks the community whether we want to restart the burn with a reduced lid parameter to mitigate certain inefficiencies. And this poll assumes that 𝘱𝘰𝘭𝘪𝘵 signal request just recently mentioned to change the lid parameter does pass. Otherwise, Andrew will issue a second signal request to change the lid parameter. Oh, was it? It was canceled?
Yeah, I paused it because there was sort of an arbitrary parameter. It didn't seem like we had community consensus. We wanted more input from Risk, so I paused it. So it was too divisive, and yeah.
Okay.
Yeah, but it was more, I guess, it was a feeler conversation starter, I guess.
All right. Well, it was canceled, everyone.
Yeah, I also commented at the very bottom, the last comment, probably in the thread the other day. You can see that. I should change the title a little bit.
All right. Yeah, probably. All right. It's cool. We have one last signal request, though. And the last one, Sebastian is moving forward on the proposed balance sheet approach towards an aggressive growth strategy by asking the community whether we want to allocate some of the maker balance sheet to ETH. And if we do, how much would we want to invest in ETH or ETH derivatives? Sebastian does present the pros and cons that come of this action. And he also notes that the signal request is aimed to gauge community desire and sentiment. No priority is currently given, and a formal implementation will have to go through a governance process to continue. And that's it. For more information, I believe there's a couple of more news and announcements. Check out the forum at a glance, which is going to be posted soon. So just a couple edits until I post it, but it'll be posted soon. And also monthly core unit updates are coming either this Friday or next Monday. Thank you.
Awesome. Appreciate it, Artem. And thanks for clarifying for us, Bourbon. Always nice to have everybody on the calls. So we do actually have an initiative update. So my apologies that spaced when I was looking at the previous week's agenda, I guess you'd say. This week we do have Lucas from Sidestream Auction Services to give us a little presentation about the auction UI and the auction keepers. Lucas, if you want to take it away.
Hi, everyone. I have sent the recording beforehand to Artem. Have you included it in the presentation or?
Yes, it's in the next slide.
All right, perfect. Yeah, then I would say we can give it a go here.
Thanks, Lucas. Might have to have you share volume, Thomas, unless that's just on my end.
Oh, Thomas, it's because you're muted.
Could also be a Zoom setting.
All right, I apologize.
Hi everyone, this is Lucas from Sidestream Auction Services Core Unit. I'm happy to give you today a brief demo on the current state of the Unified Auctions UI. By the way, it wasn't planned to have this recent downturns of the markets in order for us to give an update. Good or sad coincidence, I would say, however you want to frame it. Another quick disclaimer, this is a pre-recorded walkthrough, so please hold your questions to the end and we're happy to answer them then. So let's get right into it. So what you can see here is our landing page. During our work on the auctions, we figured that there's a lot of tools and services out there that are related to the auctions and that all provide relevant information. So we started to collect and list them here on this page, so that this page might become an entry point to the broad realm of auctions in the future. The list is filtered based on the auction type that you're selecting here at the top. Since we focused our work on the collateral auctions for now, I have selected that one. And without further ado, I want to jump directly into the collateral auctions portal that we have built. As a quick recap for those who are not familiar with UI yet, we are building with a focus on accessibility, both in terms of the UI itself, but also with regard to our code base. One of the design decisions that we took back in the day was to have this narration-based flow that provides relevant context and allows the user to read basically from top to bottom in order to understand what is actually going on and what this whole thing is about. The experienced user, of course, can always switch to the expert mode via this toggle here at the top, hiding all of this extra context information, but I will stick to the explanation-based mode for now. Core piece of this page is the table with active auctions that allows to participate or interact with one particular auction. Don't get confused by all of these auctions down here that basically need a restart. This is due to the fact that I am currently on 𝘱𝘰𝘮𝘮 for this demo purposes. One of the principles in our building process is to never leave the user in the dark. A small example for that is this small indicator here at the top of the table that informs when the table was updated last, since we are refetching auction information every 30 seconds. Now let's have a look into one particular auction. It is provided via this auction page here. At the top, you have a table with all relevant auction information, like when the auction ends, the auction amount, the current auction price. Also this little spinner here that gives an information on when the next price drop is going to happen and what the next price drop is going to be. And then you have a couple of more information on this particular auction, but I don't want to go into detail of each row right now. The important part here is that the user now can decide on how to interact with this auction. We provide both ways, either bringing own funds to the table and bid on the collateral with own DAI, or via instant settling without any capital requirements, making use of the flash loan-based auction participation. This is the flow that we introduced first. Nevertheless, I want to give a quick update on the improvements and adjustments we made to this one. We optimized this final transaction page in the past to provide as much information as possible to the user, and also for a user to make an informed decision about the auction participation. Again, what we want to prevent is to leave the user in the dark of what's actually going on. So let's quickly have a look on some of the information that is displayed here in the table at the top. Again, you can see this price spinner that we have seen on the previous page already. Then we display the price on Uniswap, since we're finally aiming to exploit an arbitrage opportunity once the auction price falls below market price. Now, don't be confused about this very low ETH price. This is due to the fact that I'm using a test auction on 𝘱𝘰𝘮𝘮 for demo purposes. This is also the reason why for the estimated profitability time, we display that it will likely not be profitable at all. Usually we would show a timer that indicates when the auction is turning profitable, meaning when the auction price will fall below market price, and we calculate that based on the step and cut parameter from the Abacus contract for this collateral type. Then there are the important indicators on transaction gross profit and transaction net profit, meaning the profit after transaction fees. Here we display the combined transaction fees. This means that we consider whether the required authorization steps for the wallet have been made already, and if not, they are basically included together with the fees for the actual execution in the end, of course. Speaking of the general steps that the user needs to make in order to execute the final auction transaction, we recently introduced this panel-based approach that you can see here. With this approach, we really want to guide the user throughout the whole flow, give hints on what step needs to be executed next and what currently is preventing auction participation. So as a simple example, if I now disconnect my wallet here, you can see that this expandable or that this panel is basically expanded, giving the hint to the user that no wallet is connected currently. If I now quickly reconnect my wallet, everything is looking good. Same for the 2 authorization transactions that are needed. They have been executed for this wallet in the past, and that's why they are checked. If one of the steps would miss, this panel would be expanded as well with another alert notification to the user that he needs to authorize first in order to finally execute the auction transaction. Now, the only alert that we are currently showing is that the transaction gross profit is negative. This is also why we prevent auction execution, because an execution with a negative transaction gross profit would result in a reverted error. Now, let's turn back to the previous page and look at the other flow to actually participate in an auction. Bidding on an auction with own DAI funds was actually the feature that we were lacking in order to have feature parity with the old liquidation portal. And now that we have introduced this feature, the old liquidation portal is deprecated, and it already redirects to the unified auctions UI that we can see here. So looking into this bidding with own DAI flow, it basically follows the similar design pattern that we have for the flash loan based auction participation flow. However, of course, we have different interaction possibilities for the user. Again, at the top, we have general information on the auction, and then the most important interaction piece is handled via this input field here, where the user is able to specify the amount in DAI he wants to bid on the collateral. The maximum amount to bid is set via the 𝘱𝘳𝘱𝘰𝘗 parameter, which is basically the debt that needs to be recovered by this auction. And it can always be set by the user via clicking this link. It's also the bid amount that is pre-filled by default. But then as user, I'm able to specify an amount I want to bid, and I will get an indication on the amount to receive of the collateral down here. We also cover different edge cases via this input field. As you can see here, there is a minimum leftover based on the 𝘱𝘪𝘯𝘀 parameter, meaning that the user is not able to specify a bid amount that is slightly under the maximum bid, because then the auction would result in a leftover that is basically lower than the minimum leftover, and it would be an auction that is no longer attractive. We can try that out, specifying the input amount here to 52K, and we display also in this tooltip here that this value can only be less than the maximum bid minus the minimum leftover, which is these 47.5K that is indicated here, or actually the maximum bid. So I will go with the maximum bid for now to look at the other elements of this flow. Again, we have our panel-based approach that guides the user throughout the whole flow, and it also checks whether all of the pre-requirements to finally bid on the auction are successfully fulfilled. This is the case for the wallet at hand. It also covers the 2 authorization steps that we already know from the flash loan based auction participation. What's an additional prerequisite here is that there is a sufficient DAI amount deposited to the 𝘧, and this is covered via this panel here. So you can see here the figures, DAI amount in the wallet at hand, the amount of DAI that is already deposited to the 𝘧. This, in this case right now, is enough in order to cover the bid that is specified here. Otherwise, the user would be notified by a red message here saying that more DAI needs to be deposited first in order to place that bid. The whole interaction with the 𝘧, so depositing and withdrawal DAI to and from the 𝘧, is facilitated via the pop-up that you can see here. Same approach down here with the panel-based design. A user is able to specify the amount that needs to be deposited to the vat. If this amount exceeds the amount of DAI that is actually available in the wallet, depositing is disabled and the user is notified why that is. In this case, there is no sufficient amount of DAI present in the connected wallet to do this transaction. Same holds true for the withdrawal. Exactly. Then the last part of this whole flow, once a user has placed a successful bid, obtained some of the collateral or all of it via this auction, the user is able to withdraw this collateral from the VAT to the wallet via the button down here. In the case at hand, I have participated with this wallet in previous auctions. So for example, I would be able now to withdraw 1.05 ETH from the VAT to the wallet at hand. As a last remark, a user is always able to manage the DAI in the VAT via the pop-up I just showed. It's also accessible via the header. So there is no reliance on an active auction. This can be done at any time by the user. Same holds true for the withdrawal of collaterals from the VAT to the wallet. It's facilitated via the pop-up that you can see here, where the user is able to withdraw collateral from the VAT. The user is also able via this pop-up to pre-authorize certain collateral types. For example, to use low gas prices when there is no active auction. You might wonder why we display here certain collateral types that are already off-boarded. This is true, but due to the fact that we are not hard coding the collateral types, but fetching them automatically from the Chainblock contract. So this is it for an overview on the current state of the Unified Auctions UI. Feel free to give feedback. It's always welcome. I hope you're still sticking with me, because as a last agenda point, I quickly want to jump into our repository and give you a sneak peek on the 𝘰𝘯𝑪 implementation that we have done. Our 𝘰𝘯𝑪 implementation can be found within our open source repository, Unified Auctions UI. The main idea from the beginning was to have this modular approach with a folder that actually contains the core logic and can serve both the UI that I just demonstrated, but also the 𝘰𝘯𝑪 implementation, which can be found in the bot folder. I'm not going to spin up the 𝘰𝘯𝑪 now as part of this demo, but refer to the README of this folder, where all of the information on how to set up the bot and what environment variables can be set in order to configure the bot can be found. To quickly walk through, we are currently only supporting in the Fura project ID, but actively working on the support for custom RPC URLs as well. Then one needs to specify the Ethereum network the bot will run on. One can whitelist certain collateral types. An operator is also able to specify the max priority fee that is passed, the refetching interval for the bot to fetch the auctions, and then besides a private key, an operator also has to specify the minimum net profit of an auction before the 𝘰𝘯𝑪 will actually bid on it. With that said, thanks for listening. Now is really the end of this demo. I hope you enjoyed it a little bit. Feedback is welcome as always, and yeah, happy to answer your questions now live in the call. Thanks again.
Awesome. That was a great video. Thanks, Lucas, for putting that together. Kind of leave off where you did there and ask the call if there are any questions, any follow-ups from that video. And a quick thank you for putting up with the audio-visual stuff. All right, I see a question from Vatr in the chat. Are are we tracking usage of the UI now in the market? So basically asking if we can tell when users are using the UI to participate.
Yeah, so what we basically did is fetching all of the take events, for example, that happened this week. To give some numbers on that, there were round about 250 auctions taken, and then as kind of a proxy, we investigated which of these take events made use of the core contracts that we are using, and the number was 47. And this is kind of the proxy that you can work with, since the UI uses this core contract, our keeper uses it, and also the auction demo keeper. So this is kind of an approximation on, yeah, the actual usage. It's not limited, as I said, to the UI itself, but it could also be that the keeper was used or the auction demo keeper. But that's kind of the closest number that we have right now.
Awesome, that makes sense. And it's really cool that you have the keeper code base set up there as well. Letter also asking if you can please talk about your Twitter
definitely do. So in this bot folder that you could see during the demo, there's also Twitter bots that we have in place. Basically, we are tweeting about every auction that is started. And of course, we'll bribe growth.
Got to get those fresh retweets. Growth has been very generous with, so don't anticipate that being a problem. But yeah, just as a side comment, it's awesome to see that many people already taking part in using this. I know we had several auctions over the last few days. Might come up as a topic a little later. So great that we have the infrastructure ready to go. Great, other questions or comments about I guess either the UI, the keeper, or SaaS in general? And 𝘧𝘪𝘀 sharing the Twitter there for anyone who hasn't followed already. Cool. Yeah, it's nice to see your progress as 𝘧𝘪𝘀's commenting in the side, and we really thank you for putting together such a concise video. Sorry, the audio and visual end weren't as good on our end, but we'll be sure to post the direct link both in the recap and on the forum, so others can grab it.
Yeah, I can say something about background here. So we still have a lot of things that we first want to get done, actually, but we can talk about it.
Awesome. All right, final call. Any last questions or comments? All right, thanks again, Lucas. Really appreciate it, both video and answering questions here live. Some of our recognized delegates echoing that, thanks. So wonderful. Well, with that, Thomas, we'll go ahead and move on. I appreciate you dealing with audio things on the fly. I know that can be stressful when hosting a Zoom.
All right, that's no problem. Thank you, Peyton. I appreciate that. We're going to move on to our discussion segment. And today we have a very pertinent topic, I believe, looking at asset and liability management. Strategic Finance is here to lead this discussion, and I would like to go ahead and hand that off to him so we can get moving on this. Should be healthy discussion.
Thanks. I will share the slide in the chat for those that want to follow everywhere. I think you have the slide as well in your deck. Yeah, perfect. So all those data are updated this morning in Europe, so around 10 a.m. in Europe. I don't think they've changed too much, but obviously they've changed a lot since yesterday. So it's basically an update of a post I made on the forum on the evolution of the stablecoin liquidity of MakerDAO, and see what's going on since we had in February 15, where we were almost up to 10 billion DAI, or just above 10 billion DAI, depending on how you count the DAI on which front end you use, and to see what was the evolution and what the last months or last 3 months, more precisely, and this week, it was doing as an impact on the liquidity. Why is that important? It's important to have liquidity on our PSM, and we will talk many of the PSM, because that's a good way to be sure that DAI is always worth $1. That's our main tool to defend the peg on the downside, so we don't get DAI below $1. Obviously, it's the same for the above $1, but that's not an issue because there is always people that can deposit USDC. But in the PSM, but when there is no longer USDC, GUSD or USDP in the PSM, well, we cannot be sure that DAI is always $1. There are other tools, and we will discuss them later. But in a block by block solution, the PSM is the best one to defend the peg. So we started in the situation where we had 6 billion of stablecoin liquidity in mid-February. So that was a lot. And obviously that wasn't good neither, because that means that all those USDC, GUSD, and USDP are not doing anything and are not generating revenues, which doesn't allow us to increase the DSR or use it to buy back to burn some Maker token, so to reward the Maker token holders. So it wasn't perfect, but it was very safe from a liquidity perspective. Since then, we have obviously the bear market made that some people have repaid loans that they have on MakerDAO. And when you are repaying a loan by sourcing new DAI, what you are doing more or less is increasing the PSM. Because if you repay your loan, the DAI demand stays the same usually, and repaying the loan just means that someone else has to deposit 1 USDC in the PSM. That was a 1 billion positive effect on the liquidity, but that wasn't much compared to all the other red effects. The biggest one would be the DEX LPs. So as we will see later, it was mainly Curve that was a drain from DAI. Then we have bridges, so DAI that were used on other L2s or sidechains that are no longer used that much on sidechains. Lending protocol are also decreasing the usage of DAI for many reasons, but maybe mainly because we are in a bear market, so there is less demand to borrow. And a few other items that we will not detail because it's quite small. So as of today, we are at just below 3 billion of liquidity. It's still a lot because we have only 6 billion DAI issued. So there is only 6 billion DAI that can be converted to USDC or to any stablecoin. So that's still a very good number. So there is no stress on this side, but still something we need to discuss today. On the main borrower evolution, so when it's you can see the evolution of the main or the VIP borrowers that we track because we know their address. As you can see, it's mainly Nexo and Celsius and the 7 farmers that have reduced their borrowings from MakerDAO. It's only one that have increased their borrowing is Gnosis. They are managing their treasury and using MakerDAO.
We need to move the next slide, right?
Oh yeah, so next slide, yeah. Thanks, Mark.
Yeah.
So yeah, you can see in red the reduction of exposure. And as I said, reduction in borrowings is increasing the PSM by side effect due to the arbitrage. Or close, it's a good proxy. And while 7 farmer is using DAI and keeping those DAI to do some yield farming activities, or at least it was the case in the past, Nexo and Celsius are lending US dollars to their clients. So when they repay the loan, they are sourcing DAI in the market to repay the loan. So they are Nexo and Celsius, when they repay the loan, they are very closely increasing the PSM by 1 USDC or GUSD or USDP. So that was the main effect. Next slide, please. So this is the amount of each asset that is owned by the curve 3 pool. So as you can see at the beginning, June 1st of this year, there was almost 6 billion of assets in the curve pool. The reason of this big liquidity is due to the incentives of Frax and Terra for their meta pool. That's the main reason, because the free pool doesn't yield that much rewards. And going forward, you can see that it was decreasing, but still keeping an healthy proportion of each stablecoin. And even in February, there was less USDT than others. It was an imbalance with less USDT. But starting this week, the imbalance of not enough USDT was counterbalanced by another exposition to USDT. As you might have seen this morning, USDT was traded up to 95 cents. So that was the reason why the pool was depleted. And as a side effect, as we had almost 2 billion of DAI at the beginning of the year in free pool, obviously those DAIs are no longer there and have been swapped for something else. So that means that the impact is that we have 2 billion DAI demands that are removed. So the PSM is decreased by almost 2 billion. Next slide, please. Now we can focus on other chain and bridges. It's mainly 3 chains that matters. We removed all those that don't matter that much. We have Avalanche, where we lost 76% of the DAI exposure there. 2 reasons for that. And as you can see on the right picture, Avalanche, the blue part was quite big. The impact of a Stargate, where we are not included in Stargate rewards, so people have switched a little bit to USDC and USDT. And there was a change in the incentive structure on AVV3 on AVAX. So DAI holders are no longer rewarded as much as other stablecoin. So that means that most people have just switched it from DAI to a better yielding stablecoin, which I think is mainly USDC. That was the case of Avalanche. On Phantom, it's a bit different. You can see a big spike when Solidity launched, and then it was fading out, but that's mainly due to Solidity that didn't took much, and the Phantom chain is quite down overall. On Polygon, it's kind of the same story. It's just the bear market that makes it less usable. It's not too much DAI related. But as you can see, that explain Avalanche, Phantom, and Polygon explain much of the loss on those bridges, and it's quite significant. So bottom line, those DAI were migrated to those chains to get liquidity farming. And when the liquidity farming stopped, obviously those DAI were just disappeared because there was no reason to get those DAI there. Next slide, please. We will now focus on the lending platform usages. And as you can see, it's mainly on, well, it's mainly due to all platforms, Cream, Compound, and Aave. I don't follow much Cream, so I don't know what happened, why there is no DAI anymore. But as you can see, Compound is decreasing on its market share since the beginning of the year. One reason might be because, well, it's Aave is just maybe a little bit more relevant now that there are some yield on ETH, because thanks to staked ETH, so that makes that borrowing and lending on stablecoin is more profitable due to that. But as you can see, even on Aave, it dropped a lot. So the last few days, which obviously makes sense as there is a bear market. And those within those 200 million DAI are the DAI of the PSM, the DeFi. Next slide, please. So this is a summary slide where we are now and what should we do. If you look at the chart on the bottom left, it's where is DAI queries that I maintain, and you can see what is the exposure, what is the usage of DAI on chain on Ethereum L1. And you can see the lending protocols, you can see the decks that are shrinking, the bridges and so on. But if you look at the bottom in purple, you can see externally owned addresses. And what is very interesting in this category is that it's growing, or at least not shrinking. And it's the case for a long period of time that, well, when DAI goes to those addresses, it tends to not move too much. I don't know exactly why DAI is used at those addresses. It can be just someone wanting to hold some DAIs because for plenty of reasons, just for liquidity preference or other, but they are not using this DAI too much, or at least it stays in externally owned addresses. So I call it a bedrock of organic DAI, organic because those people are not speculating on anything, they are just holding DAI because it's a stable coin. And it's currently 3.4 billion. It is possible that the situation will change in the future, but as you can see, looking in the back, so we had a crash in January. We now have another kind of crash, and it doesn't move significantly the amount of DAI owned by externally owned addresses. So we can expect that possibly it will not change in the future as well. So it's kind of a bottom of DAI demand. If we look at the usage that we do from the capital given by those DAI, the non-stable coin exposure currently is 3 billion. So we are below this bedrock of funding. So that's kind of a 400 million buffer to continue to deploy DAI. So even worst case, all the lending stop, all the dexes are drained, all the bridges are emptied. We still have a 400 million DAI of buffer. So I think we can continue to deploy DAI with a different project that we are pursuing. We should still be cleaning the 200 million DAI that are stuck in the USDC-A, USDP-A, and GUSD-A vault. Those were vaults that were done before the PSM that are no longer used because every client are underwater, and we just have to move those stable coin from those vault to the PSM. But they are counted as stablecoin liquidity because what are stablecoin liquidity? We just have to do the maintenance of moving those coins from those vault to the PSM. And we have to think about what should we do if the situation goes worse. What are the strategy we should pursue? So we will define that stablecoin liquidity in crisis mode could be below 1.5 billion DAI on the PSMs of stablecoin liquidity, which is still quite a large amount, and we can discuss that obviously. So the first step would probably be to increase target rate for AVD3M. So this will remove the DAI exposure on AVE. It is between 100 and 300 million of DAI savings or liquidity increase. But actually it works only for part of it because not all DAIs that we put on AVE are borrowed, and those that are not borrowed are not impacting the price of AVE, of DAI, sorry. So if we take them back, it will not move the price neither. We can also increase the stability fee on the DAI USDC LPs. The stability fee are very low. It's not super strategic, but it's still $500 million DAI that are sitting on those LPs, on those vault. Here again, it's $500 million, but even if we remove all this exposure, the impact on the PSM, it will be only half of it. Because actually in those vault, we have a USDC DAI as collateral, which is with a very high leverage. So that means that if we unwind everything, it will remove half on the asset side, on the collateral side, and half on the DAI side. So it will be full of the DAI side. So it's not 100% impactful, and so the net effect on the PSM will be only an increase of around 200 million DAI. The next step would be to increase the DSR, so the DAI saving rate. So people might be incentivized if you give them a good rate on DAI to just hold DAI, just to take the risk-free rate. But obviously, it's not something that we can do in the short term. And if we want people to move quickly on it, the yield should be quite interesting. And obviously, that's costly. And the last item we can do is increase the stability fees of all the vaults. But obviously, this will affect your competitiveness and customer relationship. You cannot increase sharply the interest rate you are taking on vaults and expect customer to be happy. We had no promise to them to keep rates as they are, but still it's a customer relationship, so we should be careful with that. And that was for me, and happy to answer question or have a discussion starting.
Looks like we had a few come in, but most relevant to what you recently said, Nadia asked when or what should happen to know that we need to act fast in a situation where liquidity is dropping on DAI.
Yeah, so it's very difficult. So it's not that fast, but it's better to have solutions already in place when we need to just execute. So currently, we cannot wait for 1 month of governance discussions before acting. If we need to move fast, we need to move to be able to move fast. Yeah, so we put a placeholder of 1.5 billion in the PSM. That's when we need to start to rush.
Awesome, thanks for having that clarity. I know Arun had a few questions. I don't know if you want to hop on the mic, but I'm happy to ask. If not.
Yeah, I'll just ask myself. But I think the other one of the questions got answered by Pramosh. Well, for clarity or transparency or whatever, I was asking if there was a clear split of the work between what Seb is doing here and basically whether we're avoiding double work within risk, and Pramosh answered that that's not the case, and there's like a clear avoidance of overlap, which is great. But so my question is, like, assuming we use 𝘧𝘪𝘳𝘧𝘪𝘴, or like theoretically a structure similar to 𝘧𝘪𝘳𝘧𝘪𝘴, then in the current situation, how many stable coins do you think, like how much USDC do you think we need to hold on chain that we simply could not put into bonds to reasonably defend the peg? Yeah. And then from that, how high do you think we could set a kind of baseline DAI savings rate?
Yeah, so you are speaking about the MIP 65 Clydesdale, not the other monetarist, I think, which is a more illiquid private credit. So it's really investing in
the potential sort of open end, right? I mean, I'm thinking about like, so I'm not talking about MIP 65 specifically. I think sort of theoretically, if we adopted a model of let's target as many stable coins we need to keep the peg, and then let's dump the rest into 𝘧𝘪𝘳𝘧𝘪𝘴 and similar structures using sort of super liquid.
Yeah, super liquid. Yeah. So we have been working on that. The main issue, obviously, if everything is frictionless, well, we should keep as little as possible in the PSM because we don't get anything in the PSM. And short-term bonds are quite liquid, or we can use some very liquid part like treasury bills and do just what Circle is doing, and it kind of works fine for them. The problem is actually more on the implementation side. There are costs involved in brokerage. And so far, it's not super clear what are those costs at the end, but there will be some friction. So it will be not frictionless, and so we would have to keep a good buffer in the PSM. I think I've said 15% in the past. We don't have definitive numbers, and it will depend mainly on the fees we get when we want to go out of those short-term bonds. Currently, nothing is done actually, so it's a bit too early to tell.
Yeah, so thanks. That answers my question. I think I think it makes sense that basically the friction of going in and out of bonds is actually going to really determine this.
Yeah. If it's 10 basis points, well, that's not the end of the day. If it's 1%, well, that's a big issue.
Thanks, Arun and Seb. I saw Long had something you wanted to add, so always take the chance to call on you, Long.
I guess that's a question, more of a sort of comment. But I was sort of, I guess I'm kind of recognizing that we have the mechanisms to resolve the peg being dropping, like falling to the downside, right, in the DSR and or stability Vs. The only issues with those are they're like more long-term mechanisms versus the PSM, which is a very short-term or like immediate mechanism. So I think something that might be wise is to set up like an IAM or something that increases the DSR along some curve as like the PSM liquidity drains from like our maximum desired percentage to like 0%, basically. Because then in theory you should get like a clear signal basically as to when your liquidity is like strained, right? Because that'll drop and the DSR will increase. But it'll just like delay that entire, or it should just like delay that entire period, right? From being like almost immediate if the PSM empties in some crash to hopefully over a longer period, because the DSR like automatically responds by increasing as the PSM drains. So like, I guess my kind of point is maybe our solution should be just to like start using our long-term fix earlier in this situation, right?
Are you saying that we should have a smart contract that is permissionless, that check if the PSM is below one certain threshold, it will increase the DSR automatically?
Yes, exactly.
Yeah, I think that's at some point we should get there, because obviously governance is a bit too slow, and it's more the most effective way to solve this problem. If we have scenarios that we all agree that is fine. And there are plenty of solutions because the DSR was tried in 2020. Maybe now it's a bit different. The market is quite different. So who knows what would happen if we increase the DSR to 2%? Will that be an impact? It's not super clear. We can also, and I discussed that for ETH. I'm not wanting to speak about holding ETH on the balance sheet, but if you hold some kind of assets that can be used as a repo on Aave, you can source some liquidities there as well. I know that Fei protocol, for instance, is trying to do that. They have a lot of ETH on their balance sheet, and they could, if there is a need of liquidity, they could use those ETH, put them on Aave, and borrow DAI or USDC to meet the demand and defend the peg. So there are plenty of such kind of thing that we can do. And yeah, just as there is just a need to implement them and move slowly and carefully on those.
If we were to do this, obviously the DSR comes from the surplus buffer. So the surplus buffer has to be replenished by stability fees. So do we imagine some sort of like bonded curve as the PSM's empty for the DSR, but then the rates group or governance is setting stability fees to pay for the DSR increase? Is that the idea?
Yeah, that was kind of how I imagined it, right? Like you use the DSR to hopefully like deal with the issue in the short term, and then once you kind of see where it settles, you can either choose to increase the SF or not, or depending on what the general like income revenue situation looks like.
And Mickerman just made a good comment to say, well, we can automate as well the increase of the stability fees. I don't know if you want to chime in, Mickerman, but that's correct as well. The question is just increasing the DSR doesn't impact the borrowers. And it might be that we need to increase the DSR above our actual revenues. So we are making a loss, but that's just a temporary solution until we governance fix the problem by raising the stability fees or something else, I think.
Oh, one thing you didn't mention in the last slide was that we still have a number of stablecoin vaults that can be like liquidated into the respective PSMs, and that'll help shore up a little bit of the PSMs. I mean, it's a temporary solution if we start to get close to empty, but that is a trigger we can pull.
Yeah, yes, that's a 235 million DAIs that are in the old vault. I mean, it's not game changer, but it's still 200 million that maybe would be important at some point.
Yeah, I might just say that we realistically hold about 4 billion of stablecoins. There's 3 billion in PSMs. There's $500 million if you count in G units as well. And this the abandoned stablecoin vaults. But then there's this USDT issue that's getting resolved. So the PSM increased by 100 million just like in last hour.
Yeah.
I'm kind of expecting this will again increase the DAI holdings in Curve. So, and then the PSM will increase as well. So I think we're gonna end at about 4 billion. But yeah, I agree with everything you said.
Yeah, so we should have a positive impact of the curve getting into balance. But curve is sometimes very slow to go into balance, as the amplification factor is quite insane, so difficult to predict.
All right. Really good discussion so far. Is there any other thoughts, feedback, comments that we want to add to this?
I'll just mention that the way a lot of other stable coins that struggle with low peg issues have to deal with it is by incentivization on curve pools. That's another tool in the toolbox potentially. Especially, I worry that the DSR and stability fee raises, those are slow mechanisms, and there may be structural reasons we can't raise them high enough to achieve the effects we want, or they may come with harmful demand destruction side effects. So it's something to keep in mind.
And all those discussions are short-term, or at least reactive discussion we can have. But one key point of this slide is as well is really the purple part of DAI on the bottom left, which is what I call organic DAI. And there is a paper of 𝘧𝘪𝘮 in the forum on that. If you can make people to hold DAI just because it's just a good stablecoin, and they use it for their daily payment and stay in circulation, and they are just using it really for cash, that's the best tool we can have, because that's sticky. And liquidity farming incentives are not sticky.
Isn't that what the purple on your graphs here is telling us, is that there's a lot of VOAs that are probably using as a flight to safety, at least during like the market turbulence?
Yeah, but it's not, the increase this last week is not that big. So honestly, I don't know. I don't know. I didn't make the search exactly of what they are using it for, and so on. But this would be a good subject to know why they are holding DAI in such a wallet.
I did want to make one comment when you were discussing that. The idea that we could count on that sort of purple EOA demand as being reasonably static. I think that's probably not true when we start to see the depths of a bear market and more like sort of bullish action. My guess is most of the people in purple are going to dump it for volatile assets they think they can make gains on. And that will put a lot of downward pressure on the peg. So that's another event to prepare for, where we maybe want to have at least like a couple tools in our toolbox to, I mean, we have a ton of tools in our toolbox already, but yeah, having them pre-canned and ready to go, it'd be nice not to have like an acute low, like deep egg event, although it's completely possible with the mechanism design that happens.
Regarding the stickiness of DAI, one of the things that we do is we work hard to have DAI integrated in as many exchanges, wallets, dApps, and whatever you may think. But again, I repeat, this is like the egg and the chicken problem. Like these dApps and projects and exchanges need liquidity. So that's why USDC and USDT are sticky, is because liquidity, and how cheap is to convert it to fiat. So let's just like remember that for to get that stickiness, we have also to work on increase DAI liquidity. And I think like the next step for that is the multi-chain strategy. I think once we start working with layer 2s and side chains and other networks and have maker vaults there, that will allow us to work closer with other ecosystems and increase integrations, like tighter integrations with other projects, and have more use cases around DAI. Because if not, it's super hard.
All right, thank you, Nadia, and thank you everyone for all your great comments. Seb, is there anything else or Risk, any other comments you guys want to talk about? We've got a lot of stuff going on in the chat, but wanted to see if there's anything else we wanted to point out before we move on to our open discussion.
No, that's it for me.
Well, thank you very much for your presentation. Peyton, is there anything else we want to add before we move on to open discussion?
No, I think everyone did a nice job adding in and asking questions. We do have about 15 minutes here before we normally end the call. So it seems fair to toss it out to everyone and say, are there aspects of what we just talked about or perhaps totally different lines of thought that we'd like to explore for the last little bit today?
All right, the floor is open. Something in the chat room says, how many regular maker holders are here?
Yes, I did a fine regular. That's pretty good. Yeah, that is an interesting bit as well. Something I'm curious about is, what our meeting composition looks like. Obviously, it's much easier to get demographics on recorded views, but perhaps it's worthwhile to do a survey for anyone who is here and is not directly tied to a core unit. Yeah, everyone's saying not core unit, non-delegate, non-counterparty. That's another another one that would bring people in.
Yeah, that's a good question. Good question for a Zoom poll. Thank you, 𝘱𝘱𝘭𝘺, for that. All right. Any other thoughts, comments, questions? Long says he can try and do a poll. LOL.
Yeah, I was clicking through my buttons and I said, yeah, it's not going to happen. But if you want to give it a go.
I have one comment while we wait for Long and he does a poll, and is that I have been receiving a lot of comments from partners and people everywhere, like being happy for us and amazed on how the market is crashing, but Maker is chill and DAI is still at 1. So yeah, I don't know if you have received the same comments. I think you have, and also, like, we didn't plan this, but I don't know if you know that we started sponsoring the Bankless podcast. So it's funny because a lot of people now are listening and trying to learn more about Terra because of what happened, and we started sponsoring it, and they recorded one episode talking about Terra. So everyone is like listening to this podcast that I shared, and at the same time they are listening about Maker, and they are just like, wow, that's amazing. So yeah, I just wanted to share this awesome news that we are receiving a lot of good comments.
Well, that is good to highlight. Thanks, Nadia. Yeah, it's definitely a stressful market week, so nice to be the ones to be sticking around. And we're investigating this poll. I guess
So the
one
reason why I'm asking is, so I had this I've been doing these 𝘠𝘬𝘰𝘳𝘠𝑚 or whatever. Well, now its name is deprecated. Now I guess we call them maybe endgame plan meetings or something like that. So these meetings I've been doing, and the goal has been this plan to try to sort of overhaul the governance for the long term, right? And I've not, given the recent events in particular, I think basically now is the time to sort of actually begin implementation. And so the very first thing I have to do is Tuesday at 5 p.m. I'm doing the first of these things are called voter committees, which is basically the sort of theoretical, something anyone can do at any time, right? Which is basically a bunch of MKR holders get together and discuss what's in their interest to vote for. Right? So today, basically, voting decisions mainly occur in these like sort of close meetings between delegates and core units. Sometimes there's meetings between core units and like VCs, and sometimes there's like meetings between collateral applicants and VCs or delegates as well, right? But the point is all the decision making is having is these essentially closed meetings, right? And I think it's completely sort of it's sort of working. It's causing things to backslide in it essentially, right? And so what I think is extremely important is that we bring the decision making process, in particular this sort of caucusing, right, of like sort of aligning votes and sort of measuring voting power and even considering opposing voting power, through that basically just create way more clarity, right? And then more importantly set ourselves up to actually do the kind of overhaul that I believe the DAO needs. So yeah, that's on Tuesday 5 p.m. CST, and I'm going to be posting in the forum and stuff. But in general, I just think it's like really, I want to try to, my impression is that MKR holders that aren't being paid in any way, they feel sort of frustrated and disenfranchised right now to a large extent. And I think a big reason for this that obviously makes a lot of sense is that all the people that are not, the core units, delegates, collateral applicants, they're all sort of paid to be here in a sense, right? They have very strong incentive to be here and and they're sort of full-time professionally dedicated to the space. And MKR holders are basically just like volunteers, basically, typically have very little stake actually. So like a meeting like this, which I would consider sort of basically like a core unit thing, right? So this is basically like a meeting run by the core units, right? It's actually difficult, I would think, that right now to get sort of just like the pure opinion of MKR holders to come out of this kind of situation, right? And that's what I want to create, a kind of, to use the term, safe space, right, for MKR holders, where we can simply discuss what is in the interest of MKR holders. And by the way, just want to acknowledge, I see the Acre Invest, which is a delegate, Kianga.
Yeah.
Sorry, yeah. Do you want to?
No, I just wanted to mention I'm newer. I just become a recognized delegate in December. And so I'd love more color if this is the right forum on the closed meetings. And I've heard this impression as well from other parts of the community that there are these where there's this perception of the real decisions happening. And I just want to, for transparency, let everyone know that I'm not in any of these meetings. So I just love to understand it more, those dynamics, and I want to be part of any solution. And so if this Monday meeting something that makes sense for delegates to attend, to hear. We talked yesterday in the strategic initiative kickoff, the difficulty of the feedback loop, right? That for delegates to know what the views of maker holders actually are potentially on issues, and for maker holders to know our views or our policies or how we're likely to vote. But I just want to say for the record that I vote my conscience, so to speak. I'm not caucusing with anyone to give me input on what I should vote for. And so I hope that any maker holder can get to know my views, and I look forward to being as transparent about that as possible. And that my view on being a delegate is kind of, yeah, to offer service to the DAO and its wider stakeholders, and that if my participation is viewed as valuable and in alignment with maker holders, then I'll get that delegation. But I absolutely in favor of what you're suggesting in terms of, you know, avoiding the perception or the actual kind of, I don't know how to categorize it, but any kind of decision making or conversations that are harming the trust factor that the community has, as well as outside stakeholders.
Sorry, I really want to make some comments there, because I just want to note that, like, so basically there's a lot of stuff happening all over the core units and sort of this sort of, I mean, I would argue that there's a kind of entity that has almost formed, right? A sort of a, like a, you know, sort of a structure of some sort, right? That has emerged basically with, I mean, I like to call it the bureaucracy, right? The sort of amalgamation of the core units and the delegates and even certain collateral counterparties, and sort of this built mainly on these relationships between people, right? And as a sort of natural evolution of that, you have these meetings where things are decided, and the reality is that everyone's been doing this in the interest of trying to get anything done, right? Because the decentralized process of makers is just so incredibly complex, and sort of has, among other things, this issue of like complexity spiraling, right, where it keeps getting more and more complex. And so as a result, like you know, I just think it's really important to, especially based on what I just said, right, to note that you know, like I don't think that there's no sort of blame or like trust issue or sort of trust factor or something like that in terms of the fact that this is happening, because I don't, in hindsight, I don't think it could have been avoided at all. So I think that, you know, it's like, and in general, there's a lot to sort of peel back, and a lot of, you know, my sort of history with the project means that I get exposed to a lot of the sort of the behind the scenes stuff that's happening. And I can absolutely say that, like, there's a whole bunch of, I mean, there's a lot of, you know, what do you call it? You know, bad stuff, or what do you want to call it? Like lots of like politics and conflict and inefficiency and that kind of stuff that just occurs in this kind of situation. I mean, that would naturally occur in any organization, but absolutely explode in like a decentralized, weird sort of pseudo organization, right? That has organically emerged. And so I just, you know, I think we should look at this as kind of, we should look forward on this, is my, you know, and like basically not try to sort of blame or you know, worry about what organically emerged, because ultimately, and this is kind of what I've arrived at, the conclusion is it has to be some kind of, you know, you need some kind of major initiative to try to really build things properly from the ground, which is what I will attempt, right? And there's simply no, like, it can't be, especially sort of retroactively, expected that the core units should have figured it out on their own, basically. I just want to make that clear, right? Because I'm worried that the reaction to this could be something like, okay, like, oh, let's sort of find out some scandal or something, right? Because I mean, well, basically it's a, you know, $60 million budget and a $1 billion DAO with hundreds of, you know, more than 100 people. So of course there's like some scandals, drama or whatever, but there's no point in trying to dig into that. Rather, we need to think about what can we sort of, you know, what can we constructively do from here.
Rune, I have been like reading these comments on Discord, but like it's always generic, like your now saying everything. It's just in a generic way. So it's hard for me to understand what's really happening, because yes, of course, we have meetings with other core units and we don't invite the community or delegates. Yes, but it's just because first, sometimes we have to discuss sensitive information with other core units to start proposing something to Maker, and it's super difficult to have these conversations with sensitive information in a transparent way with in the forum, because first, sometimes we are forced to sign an NDA to have these conversations with counterparties. So sometimes if we want to do something, we need to work in private, and then when we have the deal almost closed, we go and present it to the community, because we have to wait until governance decides if that's what they want to do or not. And I think we, as core units, we are all aligned on that we respect Maker governance, and we know that Maker holders decide what we should do or not. But you have to understand that sometimes we can't discuss everything. And I'm going to give you an example, because again, I think talking about things in general is hard to understand. With institutional vaults, you all saw the deal of Ant Alpha. We have been working on that for the last, I don't know, 6 months. And yeah, for you, the community is like it happened yesterday. And there is this Ant Alpha guy posting in the forum with all this information, and they structured this deal. Well, no, we have been working on that with them, and we are putting Maker interests first to have the best deal that we can. So what can we do in that when we have this type of opportunities? That can be discussed openly in the forum, because yes, we are a DAO, but these companies, entities, they are not DAOs, and some of them, they need privacy.
Thanks, Nadia. So I just want to comment. Well, so I just saw there was this comment from Sam earlier asking about the voter committee, which really is something. It's not. I mean, maybe you can think of it as like a meta structure or something like that, right? But it's not something that sort of, in a way, it's not a part of Maker formal governance structure, right? Because this is just essentially, it's just in a way a private call with MKR holders showing up, and then the MKR holders through sort of their, through the fact that it's a private call arranged by MKR holders, basically ensure that MKR holders get to talk, right? And then the purpose of the call is to align on voting behavior, right? And also align on who to delegate to. And so the idea, so the point is, it needs to, the whole point is the decision-making process has to become transparent, right? So when you need to not only understand what are the decisions that have been made, but also why were they made, right? And how can you verify that if you dig into the why, do you run into some kind of conflict of interest, right? Which is one of the big concerns of opacity, right? Which it's not I think that's a real problem today. I think, a lot of these issues that I believe we need to tackle it's a question of scalability and sustainability, not about there's someone that has some major conflict of interest right now and we need to deal with that or something, because I don't think that's the case. But basically the point is that anyone can listen in, and needs to be recorded, and needs to be completely sort of preserved, right, and very transparent, so that it's no longer closed meetings. But it needs to be a call, it needs to be MKR holders that do the talking, basically, right? It needs to be MKR holders to decide if we want some external input, from someone in the workforce, for instance, right? We sort of decide who and what we want to hear, right? And we recognize that ultimately there is a principal agent relationship, right, between MKR holders and the various professional actors in the ecosystem, basically. Yeah, and that will, I hope, right, will create this something along the lines of like a concept, like a safe space where MKR holders will feel more emboldened and empowered to actually speak up, right? Because my impression right now is that most MKR holders just don't there's not really sort of, I would say, sort of you know, like in a way sort of support for like the general way. I mean, I'm not saying that there's like the problem is there's also there's no specific input, right? But there's just like a general sort of discontent with the whole thing in a sense, right? But it's not, there's no feedback, like there's no way for that to be properly conveyed, right? Because there's no like, you know, I mean, there's no structure for that. And so that's what I want to create, right? And then develop from there, right? And then I have this whole, you know, large scale proposal that I'm basically developing and trying to propose that would have a bunch of next steps that just go further to try to go down this path of like, let's try to fix governance and make it really work for the long run, right? And make it really solid with checks and balances and everything that can sort of follow from taking these initial steps of creating voter committees.
Thanks, Rudin. Kind of wanted to give voice to some of what's going on in the chat right now. I think 𝘬𝘪𝘴 is kind of tying it together pretty well in terms of talking about opportunities both to speak and to organize, right? Like we can have these open GNR calls and MKR holders can hop on, but realistically it'll be a few of them versus a lot of protocol people that, you know, spend all of our time working on this. It's like quite an intimidating environment. And likewise, it's very easy for core units to coordinate with one another, right? Like it's even our job in many cases to talk to other core units and to have these meetings, to talk strategy and vision and all these other things. Whereas the same open framework doesn't quite as exist for MKR holders. So yeah, from a governance standpoint, I see this as like trying to address that kind of fundamental problem of organization, which is that like, well, we're giving resources, right, to a bunch of people in core units, but especially with no burn, the MKR holder resources aren't happening. So it makes it harder to organize. It makes it harder for people to align on vision. Yeah, just wanted to tie that in because it seems like that's going back and forth on chat a little bit. I am noting the time, but this is like a big and important discussion. So yeah, I'm willing to let it go on for a little bit, but let's also keep everyone's schedule in mind. Cool. Not seeing anyone hop on, so I think I will take this opportunity just to thank everyone for coming out to our weekly meeting. We'll have another one, same time, same place next week. Thanks for those who join us, and please keep the discussions going in the forum. I'll leave the call open a little bit now after we cut off the recording, just for any final thoughts that we didn't get a chance to get to. But thanks everyone for joining us. And I gave you the hosting power, so apparently I can't end the recording. Quality.